Pabari, founder and managing director of Forex. In today's presentation, we'll be covering two things. One, understanding about India's trade deficit. Second, what is the outlook for dollar rupee pair for the coming week. So let me start with the first part of the presentation, understanding about trade deficit. So what does trade deficit mean? Trade deficit means when a country is importing more than they are exporting, and India is one of the country which is a huge trade deficit. Having a trade deficit is not a bad thing. Even USA has a trade deficit, but with India's trade deficit there are two major concerns as of now. The first concern is our major trade partner is China. Second major concern is major import component is oil. Yes, you heard it right. India's major trade partner is China. India and China have done a total trade of $90 billion from January till September. And it is expected that by the year end, they might cross 100 billion mark. Out of the 90 billion, India has exported close to 22 billion and imported 68 billion from China. Importing with China has two major concerns. First, our import with China has been increasing over the years. Second concern is that the quality of deficit what we have with them. If you see the chart, over the years our import with China has always increased. This is despite government effort of anti-China environment, Atmanirbhar Bharat, made in India policy, still our deficit with them is increasing. Second is the quality of deficit. India is mainly exporting agri-based commodities to China, and what we are importing everything from pin, Diwali lights to gadgets like telephone, computer, laptop, etc. So the quality of deficit is also a concern. So as a country, we still have a long way to go as far as trade deficit with China is concerned. The second major concern with India's trade deficit is our dependency on oil. On an average, हर महीने का trade deficit is 13 to 15 million dollars. In the month of September, अपना trade deficit has been 22 billion dollars. Last month, August, में अपना trade deficit था 13 billion dollar. So increase हुआ करीब 9 billion dollar. Out of that 9 billion dollars, you can see that 6 billion, close to 6 billion, has been because of increase in crude oil prices. Why the import in crude oil prices have risen so drastically? Because if we see from last 1 year, the crude oil prices almost doubled. In the month of August, it was 77. Now it is trading at $84 billion. So just imagine one thing. If the crude oil price is at 84, then the trade deficit is at $23 billion. What will happen to our trade deficit if the crude oil price move to $100? Two things are definite. Pehla, inflation will be skyrocketing. Second, as our dependency on crude is high, we have a strong trade deficit followed by higher crude oil price. So the country's currency will weaken. Now let us move to the second part of the presentation, that what is the outlook for dollar rupee pair for the coming weeks. If you can see the chart, 75.50 to 75.70 is an important resistance for the pair. It has not broken that level since last 13 to 15 months. So we expect in the coming weeks the pair to consolidate between 74.60 on the lower side and 75.60 on the higher side, as there are bigger IPOs lined up in the next 10 days. So we expect some kind of consolidation. But the bigger picture for the dollar rupee pair is on the weaker side. Any dips towards 74.60 to 74.80 should be taken as an opportunity to buy imports and utilizing export forward. With this, let me end my today's presentation. जय हिंद, नमस्कार, फिर मिलेंगे.